J.Do and Jonah, the Banking Bros, here to ask the question, what if it's not going to be my body we're going to put this banking policy on?
Yeah, I'm too old, I'm out of shape, I'm whatever it might be. I don't have enough money, and I need to use someone else for the body. Let's jump into the episode, and we'll answer that question for you.
Welcome back to the Banking Bros podcast, everybody, right here at the Cash Compound. I'm J.Do, he's Jonah, and we're here to help you crack the code to cash flow.
Like always.
Jonah, now the question is, we're going to talk about the body, right? Part of the equation when we're talking about this wealth building system is actual bodies are a part of it. It's not a thing, it's actually a who.
You're right. There has to be a one body, actually. One insured person.
Okay.
Involved in each banking policy. You gotta have an insured person.
So help us understand insured, because that's not the only person or entity involved. There is an insured body, but there's also some other folks.
Yeah, there's an owner. So owners are fun because you can be an owner as a person or a business or a trust or a foundation, right? Or a club or church or whatever you can think of can own the policy, meaning pay the money, use the cash value, build a banking system.
Yes.
But again, the insured still has to be an individual. Then there's also the beneficiary who gets the money after the insured person passes away. So the beneficiary can as well be, like we like to say, family, friends, church, or charity, whoever really you want to get the money after you pass away. And you can split that 100 different ways if you like to, if you need to.
Yeah. So let's kind of dive in specifically. There's a lot of reasons that folks may or may not qualify as the body. One of the things that I always say to folks when I'm helping them get started, answering their questions and making sure they understand philosophy before we get into the technical pieces is, well, you have to have a body and it has to be alive. So the thing that I always tell people is George Washington cannot do this. He's dead.
Right.
This is all about life insurance. You do need a body. It's got to be alive. And there are some other factors that go into it.
Yeah. And one of the things that we were going to hit on today is, well, what happens if the insurance company tells me that I can't be the body? Right. And that could be for a lot of different reasons.
That's right.
Honestly, it could be because you have a pre-existing condition that insurance companies don't like.
Right.
A lot of times it's really easy to refer to some type of cancer or something.
COPD.
In that arena, because most people understand, well, with that pre-existing condition, the insurance company doesn't want you to be the insured body.
Right.
But like we talked about just previously, that doesn't rule you out from banking. That's really, really important. Some people might think that, if I have this pre-existing condition, I don't qualify for insurance. So then they'll turn off our podcast. They'll turn off our social media. I'm out. I can't get it. It sounds great what people are doing, what everyone else is doing, but I'm out. But that doesn't actually rule you out, because all it's doing is ruling you out from being the insured body.
Correct.
Right? Yeah. I mean, most people would understand if you can't be the insured because of pre-existing condition, that doesn't disqualify you from being someone's beneficiary and getting the money.
Of course, right?
Yeah. So you're not disqualified from everything. You're disqualified from being the insured.
Yeah.
The same thing goes for being the owner. Well, being the insured, having a pre-existing condition might disqualify you there, but doesn't disqualify you from owning and operating a policy, just not being the insured.
The insurance company, what they're trying to do is they're trying to establish the risk factor on the body.
That's right.
So they're trying to figure out how long that body is still going to live, how long that body is going to be able to have premiums paid on it. Because remember, the insurance in a whole life policy contract is guaranteeing they'll pay out money. So they're going to be out a whole bunch of money if you only pay a premium once or twice and then keel over with your COPD. So they don't want that body. But like Jonah said, there's other opportunities. So let's talk about this. First off, let's just make sure you understand. See, human life value is going to be based on how much more life you got left on you, how much money and how much energy are you worth. So if you don't have it because you have a previous felony charge or something like that, you've got a bunch of DUIs in your history, you've declared bankruptcy last week, those are all risk factors the insurance company's not taking on today.
Right. So they might disqualify you from being the insured, but not disqualifying you from being the owner.
Okay.
Or the beneficiary.
So let's talk about that, Jonah. Help us understand ownership. If I'm not the body, how can I own a policy on someone else?
Sure.
Like, and who do I qualify? Who can be the body?
That's awesome. That actually plays in right into our word of the week.
All right, here we go.
Our word of the week is insurable interest.
Oh, okay.
Insurable interest. That's exactly what we're going to chat about, what you just asked me, okay? Yep. So I, like we like to do on our podcast, go over to just the Googles.
Yeah,
Google.
Sometimes it's helpful.
Type it in. Insurable interest. What does that mean? So I'm going to read you straight off the homepage here. It says, insurable interest means, in simple terms, that someone would experience financial hardship upon your death. So what we're saying, to relate back to your question, is you are allowed to be the owner and have someone else completely be the insured, meaning the insurance policy is based on their body, their health, their finances, right? You're going to own and operate. As long as the two people, the owner and the insured, are connected basically financially, and there would be a hardship for you, the owner, upon the insured's passing.
So here's what I ask folks from time to time. So in the event, you know what, I'd love to have be the beneficiary, the owner, or whatever. Can I be the owner on my favorite artist out there? So like Beyonce. Beyonce is going to be the body. I'm going to be the owner.
That'd be awesome. But the answer to that one's no.
And the reason is
you've got no financial hardship coming to you if Beyonce passes.
Oh, well, emotional hardship.
Emotional hardship, sure. But no financial hardship.
Got it.
So the insurance company is going to deny that. They're going to say, no, you cannot.
You cannot be the owner
own that policy.
On Beyonce, Knowles, Carter, Ivy, per body.
You were correct till you said Ivy, I think. I think it's Beyonce, Knowles, Carter.
I guess so.
Yes.
Okay. So we got that one down. So I can be so who do I qualify for? So the question is, other people in my life, who would the insurance company say that you do have insurable interest on these people?
We like to tell people it's family and it's business partners, business associates.
Okay.
That's who you're going to have insurable interest on. That's who you'll be impacted financially if they pass away. So, for instance, real life right now, we both have children.
Yes.
We both have children. We both own insurance policies, banking policies on our children.
Yes.
So, again, what I like to tell people a lot of time, I've got a 4-year-old little boy in my house. You might know him.
I do.
And I have an insurance policy on my 4-year-old little boy, a banking policy.
So you own it.
So understand, I own it.
He's the body.
He's 4 years old. He's got no money. You know what I mean?
He does not own anything.
He doesn't own anything.
Now, he tells the neighbor kids that this is my yard and this is my car and this is my insurance policy, but actually Dad bought and owns these things.
That is correct.
Yes.
So I own and operate the policy, banking policy, but the insured body is actually my 4-year-old son.
So one day when you God forbid, God willing, you predecease him.
Sure.
The policy will then continue.
That's right, because the policy is built on the insured body, not the owner.
Right.
So he can pick it up and run with it from that point on, right?
It's a private asset you can leave to him, but it's on his body. So one day Dad doesn't need it before, God willing, you pass first and we don't have to deal with his passing before you're gone. Then he can take over and he can own it.
Right, exactly.
Yeah,
and you've got the same situation going on for your children as well.
Yes.
So that's a very easy way to kind of go around maybe the requirements that the insurance company has on your body if you don't qualify.
Right.
So this happens actually a lot in our line of business. Folks will call in and they'll say, I'm really excited to get started. I totally want to get started.
Right.
And then somewhere through the application process, the insurance company will disqualify them.
Kibosh.
Stop. This person cannot be the insured.
Yes.
And we've had it happen
100 times.
All sorts of reasons.
Oh, yes. Every reason that you can think of.
Every reason you can think of. We mentioned some earlier.
That's what the underwriting is all about. See, the underwriting, the part of the system in the process where the insurance company's trying to figure you out. They want to make sure everything's ticking on the inside, right? You got that trick eye, that funny ankle. You had coronavirus 10 times. They want to know that.
Yep.
And they might disqualify you for a host of reasons. But we can still do banking policies, and you need to know you got other people.
It's so important to know.
Yeah.
Just because they disqualify you from being the insured, you're not disqualified from owning and operating a banking policy, having them, using them, still participating.
Yep.
Not disqualified.
So,
just
Jonah, you mentioned
disqualified from the insured. insured piece.
So, Jonah, you mentioned kids,
Yep.
and so kids can have life insurance. Sometimes people ask me that. I mean that as a question. So kids can have it?
Yeah, of course. Kids, life insurance is based on a life. And last I checked, kids are alive.
Oh, wonderful. And of course, everybody's great-great-grandma out there had some sort of like Gerber policy on their great-grandma or whatever, right? Yep. So yeah, of course, kids can have life insurance as well. And they can go all the way down to...
Last time I checked, kids qualify as soon as they are 10 days old.
Yeah, that's the earliest we've ever seen, 10 days old. You know, you got a live birth, a live body, and you got a life. Now we can insure that value. Yes. Okay, cool. All right. So, what's our next question? What's our next?
Yeah, well, I actually thought we should go into our comment of the week.
Comment.
Because we've got a good comment here.
Okay, this comment is coming to us from someone who will remain unnamed for the time being, but they came to us via TikTok. Remember, we got a couple TikTok handles out there. Hopefully you guys found us out there and are having fun watching some of our stuff and being informed 1 minute at a time. And this person says, why do they deny people if they have a felony? I got that about a week ago at the time of this recording. So, Jonah, I'm going to ask you that question. Comment of the week is coming from this young lady on TikTok. Why do they deny people if they have a felony?
Yeah, I think we addressed it, but realistically, the insurance company is assessing their risk profile. That's all it is. Mm-hmm. Do we want to offer this person, our product? That's underwriting. That's what's happening during the application.
Are we willing to take the risk on someone who's been charged with a felony?
Right. So just depending on what's going on in your life, again, it could be health, could be problems with the law, but they might go, well, based on your history and what we've found out, what you've told us, we don't want to insure, we don't want to take on that risk.
Right.
We think the things that you like to do or things that you've done in the past are too risky for us.
Yes.
We don't want to insure you, and so you are disqualified.
Or the stuff you like to eat.
Yep.
Some of y'all out there know who I'm talking to now. We got to get this health right.
The stuff that you like to participate in, you are officially disqualified from being the insured body.
Now, a new question for you then. Are we disqualified for time immemorial or whatever they say?
Like forever.
Forever.
A lot of times, no.
A lot of times, no, everybody.
No. You're not disqualified forever.
You're disqualified right this second.
You're disqualified for a certain amount of time until you can basically prove yourself. Oh,
yes.
That was a
statute of limitations.
It's a one-time thing.
Yes. Or I cleared up my debt issues or my bankruptcy issues. I'm no longer in that situation.
Or I lost 50 pounds and now I don't have high everything.
I haven't been smoking for a few years. Now, smoking does not disqualify you, so I should say that. Some people wonder. So smoking does not automatically disqualify you. But, maybe you have, health concerns based on the fact that you were a smoker or something like that.
Yep.
Okay, cool. Got it. So I think we're helping people out and understanding this. Okay, so now here's a couple things that you might want to know. When we are talking about children and getting them, remember, I have kids, you may have children as well. Grandchildren, do they count as family members?
I'm pretty sure they do.
Wonderful. Okay, very good. Parents, right? So these are people I have insurable interest on in my life, and I can own insurance, start insurance policies on them. A couple things that you need to know is, remember, adults have to go through that health assessment strategically in a paramedical exam. Yep. We'll set that up for you if you call our office.
Free of charge?
Free of charge. It's on the house. It's part of the insurance company's profiling process. So it's no cost to you. It takes 15 minutes. Now, children don't always have to go through that.
That's right. A lot of times, minors, just so people under 18, don't have to go through the paramedical.
We got like an annual checkup from their family doctor, and that counts.
Yeah, absolutely.
Yeah, so you don't have to do anything
when you've got babies, especially, a lot of times they just want to make sure they've made it to a pediatrician and things like that.
So you can call the pediatrician and they can send off the information. No new medical exam on them.
So sometimes that's a big question that comes up. They go, well, in the process of me getting started this policy, I had to go to the do the paramedical exam and had to give a little blood. And I don't want my niece to do that. She's 6.
Correct.
She doesn't have to. Yeah.
Right. In normal circumstances, right? General health here. Secondarily is if I'm trying to own a policy, Jonah, then I'm not that healthy. I'm older than you. Now, age is a factor. We didn't talk too much about that.
Yep.
I get too old and the insurance company's like, hey, we know you're about to go soon. So maybe it's not going to be in your ad, two things. It may not be the greatest banking policy for you if you're too old,
right?
But even if they'll insure you. And secondly, you just may be at the point out there listening to us, you're just too old. They don't want to cover you anymore. But you can get it on other folks. Now, if you're going to get something that you own as a banking policy on an adult family member, business interest. How does that work? What are some of the nuances?
A lot of the same. So first thing first, you got to talk about that insurable interest. So we need it to be a family member or a business partner.
Yep.
You got to be impacted financially by
maybe even a key employee.
Sure.
If you own a business.
Sure. Absolutely.
Yeah.
Sure
That
thing.
counts as a business partner in the eyes of the insurance company.
Yeah, absolutely. So that's first. Secondly, of course, during the application process, you can't get the insurance policy on a key employee or business partner or family member without them knowing. Sometimes this comes up.
Yeah.
So heads up, not only will you have to sign off on, I'm going to be the owner.
Yeah.
That person's got to sign off on, I know I'm not the owner. This other person is. I'm okay with this happening,
Right.
But realistically speaking, much like a regular person getting that policy, right? So paramedical exam is more than likely. A couple papers here and there to sign.
Application to go through. Yep.
And pretty much it.
Got it. Okay, very good. So we just wanted to spend some time on this episode, ladies and gentlemen, helping you understand a little bit about what it takes if you particularly were not the insured body on the insurance policy for banking. And remember, this is all about your life. This is not just about death. So that takes us to our next segment, I believe, our quote of the week.
It sure does. We're actually going to reuse a quote because it's powerful.
They're so good.
This is actually one of our quotes from a few episodes ago, if you're paying attention. This quote is from one of our favorites, R. Nelson Nash, the author of the very, very powerful book, Becoming Your Own Banker. If you have not read that book, we should have a link to it underneath this podcast. If you're videocast, if you're watching on YouTube, and podcast, it should have a link to it as well. But the quote is, "Your need for finance during your lifetime exceeds your need for life insurance protection. If you solve your need for finance through life insurance cash values, you will end up with so much insurance that you can't get it past the underwriters. You'll have to insure every person in which you have insurable interest."
Oh, that's good. That's everything we were talking about, really.
That's it.
But sometimes the podcast just write themselves.
Yeah.
He put it all in there. So if you have not, check out that book. You're going to need to read it again to make sure your mind is right under the philosophy of solving the need for financing and cash to purchase and fund your lifestyle. You can do that through whole life insurance policies from mutual companies, and we are happy and here to help you.
Sure.
Thank you guys for looking and listening once again, and we'll be back with you very soon for another great episode of the Cash Compound Podcast.